But private job growth beat expectations, and PCE, a inflation measure, if I'm recalling correctly, is on deck tomorrow, followed by the jobs report on Friday. That's November 1. So what does all this mean for the market? Ashish Shah is Chief Investment Officer of Public Investing at Goldman Sachs Asset Management. Mike Santoli is our senior markets commentator. Ashish, I'm going to begin with you and ask you a question I did right before we came on the air. Are you surprised the market has had this sort of unrelenting upward course that it's had all year long?
Look, I'm not surprised, because if you think back to 12 months ago, where we have had a 40% rally from 12 months ago, the world was a really scary place. You had positive correlation, you had across bonds and stocks, right? So your stocks were going down, your bonds were going down, investors were not happy. And over that 12-month period, what's happened is that you've seen a rally in bonds, you've seen the Fed start to ease, you've seen the economy stabilize, and you've had this kind of growth from AI that is just creating a tremendous amount of economic growth and value within the stock market.
The AI trade, Mike Santoli, has certainly been one of the animators this year. Can it continue?
Well, I think it obviously can continue. The question is, how much has the market maybe already figured out? I think what's been interesting is it was really the first half of this year when that was really dominating, consuming most of the oxygen in the market, that AI trade, the mega cap tech group. If you go from, let's say, July 10th, happen to have these numbers off the top of my head, that was right after a very benign CPI report. That's the peak in the NASDAQ 100. We're still not back to it. The broad S&P 500, the equal-weight S&P, the Russell 2000 have all vastly outperformed since then, because you have had this sense of the Fed has clearance to ease a bit into a firm economy. Earnings growth is broadening out. So I think you can have more than one thing happening at one time, which is excitement over AI and the rest of the market, too. I will say, though, S&P up 22% year to date, trading at 22 times forward earnings. It's obviously not an inexpensive or really underexploited bull case anymore, but I think it's still intact.
And Ashish, I guess the question now is, if you thought it was obvious we were about to take off on a 40% increase, please tell me what the next 12 months are going to bring and the election outcome and all the rest of it, because we always worry that when optimism about the market is now so high is the moment when things are going to unravel.
So look, I think that you are going to see positive returns in equities from here on out, but I think it's going to come in a different way. And as was just highlighted, you've seen kind of a different market since July. July, August, September, it really does feel like a very different environment where the market's broadening. One of the trades that I think is really interesting is what I like to call the power pivot, where you're seeing not AI stocks, but you're actually seeing kind of the stocks that benefit from AI. Whether it's utilities, industrials, other parts of the economy where investment needs to happen to facilitate this economy going forward. That's what's going to propel us into this forward cycle. I think the other thing that's fantastic to see is that as the Fed pulls its foot off the brakes, right, other parts of the economy that have been holding back because there just wasn't enough capacity to grow, they're able to take hold and generate returns for those companies. Meanwhile, those companies have been leaning out during this time.
What does Mr. Market want to see out of the election? Does Mr. Market care really in the long run, whether it's a Harris victory or a Trump victory? Does Mr. Market really care in the short term whether there is a definitive result or a period of challenge to the results? Walk me through how I should think about the next few weeks and ultimately whether the market truly cares whether Harris wins or Trump wins.
Yeah, so I'll tell you the following, which is the number one thing the market wants to see when it comes to the election, is it wants to see the election done. Right. Mm-hmm. So if the election drags on.
And not drag on. Give me a result.
So what I've seen from every market participant out there is everyone's taking down risk. The market does not like binary events. We've seen that in the past. Binary events are not what the market likes to invest in. But having said that, once we get through the election, which we will, I'm very confident we're going to get through the election, then the pivot is going to be towards what are monetary policies and then what are the policies that sit across different sectors. I think in general, though, there's been policy convergence. Shockingly, it might seem like strange to believe, but there's been policy convergence where there's going to be investment in the U.S. in manufacturing capacity. There's going to be kind of higher walls in the U.S. relative to imports. They may come in different forms. It may come from export restrictions. It may come from tariffs. But the magnitude of those and how rational they are relative to what's priced in the market or what's going to matter for market returns.